Good morning, everyone. My name is Andy Bradley from Delta Energy Environment. I'm joined today by two of my colleagues. I'll introduce them in a minute. I see many people are just joining the webinar, so I'm sure over the next 2 or 3 minutes there'll be a number of people coming in, but I think we'll start the webinar now and the sort of introduction for the webinar. We're planning for the webinar to last around 40 minutes today. We find that's just kind of optimum time in terms of having enough content and depth to the discussion, but not taking up too much of people's time. We know how busy everyone is. So I'll just introduce the webinar, and then Neil and Alex will talk us through some of the research findings from our latest report in the New Energy Business Model Service, looking at the question of what are the smart plays. So joining me today are Neil in our London office. Neil, say hello.
Hello, everybody.
And Alex, who's based in our Paris office.
Hello.
And myself, Andy Bradley, based in our Edinburgh head office. So a very virtual team speaking to you today. So thank you to those who have just joined. I see many people just joining the webinar. So we're just kicking off the discussion now. If you have any problems with sound, I suggest that you perhaps log out of the webinar and come back in. It usually works best if you use the phone option to listen to the audio rather than using the laptop. So I'll suggest if you have any problems that perhaps you dial back into the call using the phone option. Just a little bit of information on the webinar software itself. There is a chat box on the right-hand side. We're very happy to take your questions as we go through. On the right-hand side of your screen, you'll see a sort of dialog box called chat, and you can send a question to the organisers if you would like to submit a question. We'll try and pick some of those up as we go through, but if we can't come back to you directly today, then certainly we'll try and follow up with you after the webinar itself. So I know we have many subscribers on the call today familiar with Delta EE, but also we have a number of people on the call who aren't subscribers to our research. So just briefly to introduce our work to you and give you an overview of our focus at Delta EE. Our mission is to help the organizations that we work with to develop the best strategies, business models and customer propositions for the energy transition. Everything we do is related to the shift from the old energy world to the new energy world. And the uniqueness of our work here at Delta is that we have both the breadth and depth of specifically around new energy. So you can see on the screen in front of you now the areas that we cover in terms of e-mobility.
Andy, just to butt in there, apologies. I think at the moment we can only see the title slide.
Okay.
We're not seeing what slide you're talking. There we go. That's working.
Okay, thank you. Sorry, when I started broadcasting, I had assumed it would move on to the slides itself. So apologies for that.
No problem.
Yeah, so just to perhaps recap for the people who have just joined, there is a chat box on the right-hand side of your screen. So please do submit any questions as we go through. Then in terms of Delta EE, for those that don't know us, the unique aspect of Delta EE is the depth and breadth of our research. So you can see we have research teams covering e-mobility, the intersection between EVs and electricity, flexibility and energy storage, heat, distributed power and digital energy, or smart home, connected home. So we have teams that are really immersed in each of those spaces, and Neil and Alex have a focus on the business model propositions across all of those areas. So we're very much today talking from a technology agnostic perspective, looking at the commercialization, innovations and propositions that are being developed to enable the energy transition. In terms of how you can access our knowledge, there's two routes mentioned at the bottom of that slide: subscription services on the left-hand side and consulting. And really, our clients work with us on a confidential consulting basis and/or subscribe to our research services. So just a very brief overview for those that aren't familiar with Delta EE, and please visit our website if you'd like more information. So specifically on the business model research that we're talking about today, just a brief slide showing some of the publications that we've issued recently for our subscribers. So Neil and Alex and the team have produced a recent report on peer-to-peer trading. Also done a piece of work looking at blockchain and energy and the use cases of blockchain. And also we published, as you can see on the slide here, a number of case studies, both updates and new case studies. So we're always adding new case studies to our case study library, which is the key evidence base of this research program. And then on the bottom left of the screen, you can see some ideas and the things that work on at the moment, particularly around the landscape for new energy business models, what isn't working. We're really led in our research by what our subscribers find most interesting. So particularly for the subscribers on the call today, please do feedback to us the topics that you would find most interesting, and we'll certainly take that on board in terms of our future research plans. So really do let us know what questions will be most interesting for you to hear about from us. A couple of other things before we move on to the main presentation. I see that quite a lot of people have joined now, so welcome to everyone that's just joined in the last couple of minutes. We're launching our New Energy Summit shortly, so the registration will open. This year it's in Berlin at the end of September and beginning of October. It'll be building on the themes that we had at our summit last year in Amsterdam, and look forward to being able to welcome many of you at that event in Berlin. So look out for the registration, that'll be opening soon. And then on the right hand side, I'm sure many of you are already aware, but we have a Talking New Energy podcast that's available from our website, but also on the normal podcast platforms such as Spotify. So please do feel free to download and listen to episodes from our Talking New Energy podcast. If you'd like to participate in any of the podcast episodes, please feel free to contact me. I'm always happy to discuss that. So moving on to the main part of the presentation itself. Today we'll be talking about a recent report that we published looking at the question of what are the smart plays in the new energy business model landscape. And you can see on the screen now the table of contents for that report. If you're a subscriber to the service, then please do make sure you go into the subscriber website to download the full report. Today we'll just be sharing some of the highlights and main messages from the report, but all the detailed evidence base and analysis is available to subscribers. Of course, for non-subscribers, we'd be delighted to welcome you as a subscriber, so feel free to contact us if you'd like more details on the work itself. So in terms of some of the headlines from this research, just to share with you, share with the audience our sort of overall thinking, main messages from the work that we've done. We've looked at 11 different types of business model within this work, within this report itself. We have categorized our thinking into sort of two main dimensions. So we characterize them there as strategy A and strategy B. So strategy A being the plays to develop end customer propositions, be they B2C or B2B. So be they for residential or commercial industrial customers. So, but plays that really are about developing a proposition for an end use customer, as opposed to strategy B, which is much more the enabler approach or picks and shovels approach, as some people describe it. So really looking at the B2B2C or B2B2B type propositions. So on the strategy A category, we've identified two areas which we think are particularly interesting. One is platform business models, which is probably not a surprise, I think, to many in the audience. So looking at the platform plays into both the residential and the C&I space. But then also, secondly, we do think the C&I behind the meter space is a particularly interesting area, and Neil and Alex will talk about that more as we go through the presentation. And then in strategy B, the picks and shovels approach, we really identified three areas that are most interesting. First one is around software plays that enable the scalability of the C&I business models, and we'll talk a bit more about that as we go through the presentation. Secondly, plays that significantly reduce the cost of accessing customers, acquiring customers, or finding partners. And thirdly, the plays that enable interoperability between devices and platforms. And those are our three top picks for the picks and shovels investment approach. So those are our kind of overall key messages and findings and what we think based on the evidence that we put together. And as in the course of this work, we've identified 7 sort of key approaches to improving scalability, and we'll talk about one of those today. But we would recommend that in terms of looking for interesting opportunities and the smarter plays in the space, we'd suggest looking for companies that demonstrate some of these key approaches for scalability improvement. By C&I, we mean commercial and industrial, so I should clarify that. So it's the commercial and industrial part of the market. So those are some of our key headlines and messages from the work, but now I'd like to hand over to Neil initially, and then Alex to take us through some of the more detailed methodology and evidence base that we developed.
Thanks very much, Andy. Much appreciated. So I'm going to talk you through a bit of an introduction into how we approach this question and go on to talk about some of our key findings. So this slide really is just to provide a bit of an overview of the 11 business models that we studied. So our aim was to select a wide range of new energy business models, although of course there's lots that we weren't able to cover, which we would have liked to. Hopefully most of them are fairly self-explanatory, maybe just to pick out a couple there. So C&I, EV charging platforms, so that's about software and how it's used to operate a network of EV charge points. Aggregators as well. So we focused on software-only aggregators, of which there's not too many at the minute, but they look to connect and control distributed energy resources without having to install additional hardware. So I'll talk about a few of these in a little more detail and explain what they are as we go on. So just to talk a bit about our methodology. So in order to answer the question, what are the smart plays? We decided to focus on 2 key things, so business model scalability and market size. Now, obviously, depending on your organization and your organization's goals, there are other factors that you maybe could or would look at when assessing your investments or product development opportunities. However, we decided to focus more on these commercial considerations within this report. So we're looking to identify smart plays in terms of potential future profitability. So the report is based off of discussions with a range of senior industry stakeholders, so really experts in the field who are asking themselves this sort of question. And we also leverage data and expertise from across all 11 of our internal research services. So combined together, they provide a really in-depth knowledge base about the full range of business models we looked at here. So we had 4 key steps to our process. First off, we looked to identify the key scalability factors, and I'll explain those shortly, but at a basic level, scalability is referring to the ability for a business to increase its profit margins as it increases its revenues. The next step was to weight each factor depending on its relative importance to scalability in new energy. And then after that, we scored the 11 business models against each of these factors, and then wanted to combine our assessment of scalability with market sizes. So the 4th step was to estimate market sizes. So our market sizing represents the serviceable obtainable market by 2025 in Europe. So in other words, that means our best view of how big the markets will realistically be by this point in Europe. So just moving on to quickly cover off the different factors related to scalability. So we split down that concept into internal and external factors. So internal scalability really refers to the effect that a business model's design has on its ability to increase profitability. And we include 3 factors within that. So first is operating leverage. So that refers to the proportion of fixed and variable costs in a business. So businesses with high variable costs will have a low operating leverage, like you can see on the left-hand side there. So as its sales increase, its operating profit margins don't get much wider. But as proportions of fixed costs increase, then your operating leverage gets higher, and the potential to increase profitability as you increase your sales goes up, so as you can see on the right-hand side there. Other key factors included the ability to bundle additional products with your core offering, which can help to multiply your revenue streams without adding a huge amount of cost to the business. And then the 3rd factor that we looked at is what's called network effects. So that essentially what network effects refers to is instances where the value of a product or a service increases according to the number of other users of that product or service. So a nice non-energy related example of that would be telephone networks. So with telephone networks, the value of owning a telephone actually increases as other people own telephones, because essentially there's more people for you to contact. So network effects is a really key driver of scalability for modern day platform business models in particular. Then in terms of external scalability, so that refers to the level of impact that certain outside factors have on a business model's ability to increase and maintain profitability. And we identified 5 factors there. So first off was growing demand. So fast growing markets, of course, in which customers haven't yet settled on an incumbent can facilitate quicker revenue growth. Adaptability, so the ease with which you can transfer a business model across different regulatory, cultural, and competitive environments. Competitive advantages as well. So that's sometimes known as economic moats, and that's of course absolutely vital to a business being able to protect its revenues and its margins from the competition. And we see some business models offering more opportunities to do that than others potentially. And then the final 2 factors that we considered were economic resilience and subsidy independence. So hopefully that gives you a very brief but clear picture of how we came to our picks for the smart plays in the 2020s. And I want to move on to the...
Neil,
yeah.
Actually, can I ask a question that was in my own mind and somebody else has asked about the relative importance of internal or external scalability? Which one is more important, do you think?
Yeah, no, it's a really good question. So I think both are absolutely important, but I'd argue that perhaps external scalability is more important, and that's really because you can still have a profitable business which isn't that internally scalable if you have all the right external ingredients and conditions. So things like growing demand, competitive advantages, adaptability. If you've got all those ingredients, you can have an internally not that scalable business model, but still operate a successful business. But if you flip that the other way around, you don't have any of those external ingredients, but on paper, a very internally scalable business model, then it's not really going to work. So I'd suggest probably external is more important.
Okay, thanks.
That's all right. So yeah, I'll go on to share with you all now some of our findings, some of our high-level findings from the research. So the next slide gives you our assessment of the business model landscape in 2025. So this shows both scalability and expected market size. So you've got internal scalability along the x-axis there and external scalability on the y, with the bubbles representing our expected market size in Europe for 2025. So a few key points to note here are that there's a fairly high base level of external scalability. So you can see the big white space at the bottom of the graphic there, and also the fairly low variability in external scalability between the 11 business models. Now we don't think that's all that surprising, because these business models are by definition really interesting for the new energy market. We get asked lots of questions about these specific business models, so there's maybe a little bit of self-selection bias there. There was, however, also or conversely, I suppose, a much higher spread in internal scalability. And there's kind of 2 distinct groups that emerged. So we've got the more hardware intensive business models clustered on the left there, and that's primarily a result of their low operating leverage. And then furthest right, you've got the platform businesses, so things like peer-to-peer trading platforms. And those benefit not just from, of course, high operating leverage, being purely digital with a high proportion of fixed costs, but also, and more importantly, from network effects. And it's really network effects that gives these platforms the edge over the non-platform digital business models. So things like dynamic time of use tariffs and also switching as well, which you can see sort of in the middle of the graphic there. And then just quickly in terms of market sizes, well, these ranged really from around 500 million euros a year up to 6 billion euros in revenue a year by 2025. So that's what we think is a realistic view of the revenues available. So the total actually for all 11 comes to over 30 billion euros a year. So whilst there's of course a lot of room for that to change over the next 5 years, there's clearly a really big potential prize on offer across these 11 business models. So moving on to more directly answer the question I suppose we set ourselves. Our first set of picks I don't think is going to come as a surprise to anyone. We've gone with the most scalable, potentially largest as well of the platform business models. So those are local home services, aggregators, and EV charging. And we've done that for a few reasons. Looking at the traditional home services market in particular, well, it's already worth billions today, but it's very analog and it's highly fragmented. It's dominated by local tradespeople in most European markets. And we suggest that makes it a really prime target for digital disruption and consolidation as well. And that's something which platform business models, certainly in other markets, have really excelled at doing. So we don't see any reason why that couldn't be applied to this market. We also expect the EV.
Neil, just a point of clarification there for the audience, that these market sizes are for Europe, so for European Union, and we're thinking about 2025. So that's the time point we have in mind and the scope that we have in mind for the market sizes. Just to clarify that, because there's one or two questions on that from the audience.
Oh, sure. We also expect with the other two platforms there, so EV charging and aggregation, those markets to grow rapidly out to 2025. So there's potential synergies, you would think, between those two, and also their high levels of internal and external scalability makes them a really highly attractive option. One caveat, though, that's worth mentioning, and that applies to most of the digital business models that we looked at, is the issue of market saturation. So we reckon it's unlikely that lots of platforms and lots of software solutions all doing broadly similar things are going to be able to coexist profitably across the whole of Europe, as this is quite likely to lead to a price war, because it's quite easy to take a software or a platform and apply it to new markets. So in that sense, the first movers in these markets can benefit greatly from network effects by quickly building up a loyal base of users, like you've seen with the likes of Uber, Amazon, and so on, thus making it very, very difficult for competitors to enter those markets. So we think that first mover advantage is even more key in the platform business model environment than in others. So then moving on to our second set of picks. Now, both of these are commercial and industrial, customer focused, and you might think they're somewhat counterintuitive based on our methodology. So those are behind the meter PV and storage, power purchase agreement, and energy as a service. So PV and storage PPAs involve installing and owning and maintaining a PV and battery system at a customer's site, and then selling the power to the customer via a fixed price kilowatt hour agreement. And then energy as a service business models for commercial and industrial customers are ultimately about bundling together multiple energy services, so things like new energy assets, maybe commodity optimization services, energy management, and often a degree of financing as well, and then offering that to a customer for a single monthly fee. So these are, as you can see, amongst the least scalable of the business models that we looked at, and that's mostly due to their hardware requirements and this site-specific customer design that needs to go into each of them. But what we really like about them is that, for one, they're already a real potential market today, with energy among the top costs for many larger businesses. And we also see the drivers for growth out to 2025. So this point you can see here is really strong. And those are things like new technologies making the delivery of these business models easier, less risky, and also the expectations of companies to reduce their energy consumption, we think are going to continue to rise. So the key really for these business models is going to be finding a low-cost ways to scale. And we do also see an opportunity, as Andy alluded to earlier, to assist companies delivering them in doing that, in finding these low-cost ways to scale. So just to sum up quickly, ultimately, whilst we've chosen those two areas as our smart picks, we do expect to see individual winners within all of those 11 different business models we've looked at, as each of them does have good potential to grow demand, and each can become a multi-million-pound market. So in that sense, the key really is going to be picking individual smart plays, and finding ones that have low-cost ways to scale. So identifying the pick and shovel plays, so the innovators who can develop solutions that enable these companies to scale up is also a potentially very sensible strategy here. So just how companies in new energy are trying to improve their scalability is something we did look at as part of this research. So with that in mind, I'm going to pass on to Alex now, and she'll talk you through one of the 7 approaches that we identified taking place today. And hopefully that will help validate your own thinking as you go in search of the smart plays. So I'll pass on to Alex now.
Thank you, Neil. So as Neil just mentioned, we identified 7 ways to improve scalability of a business model. All of them do not apply to all business models, of course. For instance, reusing as much as possible of the business model was one of the key approach identified. And it applies better for companies which have a high variable cost, such as commercial and industrial players, because reusing as much as possible of the existing business model enables to reduce the development cost, which is particularly high in those cases. So I'm going to introduce a little bit further this approach that we identified in the next slide. Basically, reusing as much as possible of the business model enables to turn variable costs into fixed ones. So for instance, keeping initial development costs low or using modular contracting options enables to turn those variable costs into fixed ones and help to increase the adaptability and have a scalable cost structure. Eventually, it allows the company to have wider rollouts, reach different customer segments, and hence increase sales and revenue. But overall, what it really helps to achieve is improving the operating leverage of the companies. So to cite a few examples of business model where reusing as much of the business model as possible is really useful, I think aggregators are a really good example. So to cite 2 examples, Energy Pool and Restore use the same core business model for different customers. So they basically just change the package of their offer, but the core remains the same. So they don't incur additional cost, and hence they can increase the number of segments they can reach with a similar offer. Another type of companies which can use this approach is companies offering dynamic time of use tariff. I think Avatar and Octopus are a very good example of those, because they have developed their own IT platform, and those platforms are among the best and the more complex platforms for time of use tariff. And they white label this platform to third party, so that enabled them to expand to new markets at very low cost and get additional customers and revenue. It eventually will give them the potential to grow internationally with very low additional cost. And lastly, as I mentioned before, and Neil mentioned as well, for C&I companies, this approach is very interesting, especially when they have energy as a service offers. So to take an example, we know a major utility which applies a 80-20 rule when taking on new energy projects. Basically, it means that 80% of the new contract proposition need to already exist from a previous solution. And also, it helps this company to keep its costs really low while capturing more and more opportunities. Another company that I would really like to introduce is SparkFun. SparkFund is a US company. It's also a CNI energy as a service offer. And it has managed to reuse as much as possible of their business model to increase their revenue. So to give you a little bit of an introduction, SparkFund was founded in 2013 in the US. And originally, it was an investment platform for energy efficiency upgrades. Now it offers a technology subscription. It means that they provide their customers with a no upfront cost way of outsourcing energy technology. So for a commercial and industrial company, the barriers to scale up are actually very big, especially when they are offering energy as a service. So to cite some of them, there is a very high upfront cost induced by the installation of the products and the need for precise bespoke design, which is very expensive and induce a lot of variable cost. And additionally, it is well known that it's difficult to make sales in this sphere because CNI customers are very picky and don't have so much time to consider different offers. So to ensure the potential for scaling up for the business, SparkFund had developed key features. I think the first one, which is really important, is the number of partnerships they managed to build. The second one is the fact that they developed their own transaction platform. And the last one is the very innovative modular contracting that they offer to their clients. So having partnerships and their own platform first, that make them very adaptable and lower their variable cost wherever they operate. They are not sensitive anymore to the market they are involved in. So that gives them the possibility to reuse their own capability and their own partnerships, and hence to turn variable costs into fixed one. Secondly, the fact that they offer these modular contracts for their clients that enable them to capture easily at a very low cost more opportunity with the same clients. And in addition, it makes things way easier for these clients to contract new offers and products. So eventually, the whole strategy is becoming more and more scalable. And at the moment, they're managing $51 million worth of assets from hundreds of customers. So it works pretty well.
Alex, there's a question. Which markets are they active in, SparkFund? Is it just in the US?
Yeah, they're in the US and they're commercial and industrial.
Commercial and industrial in the US, okay.
So, yeah, B2B.
Thanks.
I'm going to pass it on to you, Andy, anyway, so that you can conclude this presentation.
Okay, thank you, Alex. So just we've had a very quick run through there from Alex and Neil of some of the thinking and evidence that we've developed. Clearly in the main report, there are lots more examples of companies that we see in each of the areas demonstrating some of the 7 approaches to scalability. And please, for subscribers of the line, download the full report and have a look through there and reach out to us. We're very happy to discuss the work that we've done and the evidence base that we've built up. So just to kind of recap on our conclusions from the research around the 5 plays that we see are most interesting, the 2 on the left being the kind of B2B or B2C plays around platforms and behind the meter CNI business models, and on the right the kind of pick and shovels approaches around software and enablers into the market. So we'd really like to ask the audience for their response to this view, and I'd like to now launch a poll onto the screen if I can get the software to work. So you should see on the screen now a question, and we'll ask the audience to vote. And we've deliberately made this a single choice only, with the question: if you had $10 million or 10 million euros, sorry, to invest, where would you put it? So we put our 5 smarter plays or areas of smarter plays on the screen there. So platform business models, so things like local home services, perhaps aggregation platforms or EV recharging platforms as first choice. Second choice, CNI, behind the meter business models, energy as a service, or perhaps PV and storage bundled with a PPA perhaps. And then number 3, the software plays, around the scalability of CNI business models, so enabling the scalability of CNI business models. Then number 4, the plays that provide a platform for accessing customers or network of partners, so plays that reduce the cost of customer acquisition, which is clearly a key challenge in the new energy market for many companies. And then finally, the plays that enable interoperability, so enabling low-cost interconnectivity between different devices and different platforms. Those are our 5 areas that we identified, and I'd be really interested to see what the audience thinks if they had to choose one of those. So the poll is in progress, and I can see that about getting on for 2/3 of people have voted, so perhaps I'll close the poll in just a few seconds. Just wait for a few final people. I can see votes are still coming in. So I'll close the poll in 5 seconds, and then I will try and publish the results for the audience to see. So okay, so I close the poll now. About 3/4 of people have voted. Okay, so the poll is closed. And now if I share the poll result. Okay, on the screen now, you should see the poll result, which unfortunately on my screen is very small. Neil, I don't know whether you can speak to the poll result.
Yeah, sure. So we've got around 1/4 of people voting for platforms. 25%, and then CNI behind the meter business models at 36% was the winning choice, which is interesting actually. I maybe would have expected platform business models, given we thought it was kind of I guess the first thought answer you might have about smart plays. So interesting to see that CNI has won out actually. And then in terms of the enablers, so the picks and shovels plays, you've got plays enabling the interoperability of devices with 17%. So that was the most popular of those, and then the other 2 slightly less popular.
Yeah, an interesting result. Very much a bias towards the B2C and B2B plays rather than the kind of enabling plays. I mean, we always have to be conscious of these poll results. It may reflect the nature of the audience. You know, a lot of Delta E's work is with companies trying to develop propositions for end-use customers. So perhaps there's a natural bias in our audience on the webinar today. But it's certainly interesting to see the CNI coming out most strongly as well. Okay, all right, cool. Thank you for that. If I can close the poll and return to the presentation. Back to the presentation. Yeah, just in the last 5 minutes or so, just maybe pick up 1 or 2 questions that have come in from the audience. Let's have a look at these. I mean, I think there's interest. 1 or 2 people have mentioned about subscription business models, Neil. And we haven't mentioned that specifically in our presentation today. Do you have any thoughts on how subscription business models fit into the narrative that we've talked about today?
Yeah, definitely. So I suppose a subscription would be a revenue model, really, and you could apply that, would be an option for most of the business models that we've looked at. And actually, I think thinking back on the 11 we did, there's examples in the market today of subscription type revenue models being applied to pretty much all 11 of them, I think. Now they're of course a really appealing way to generate recurring revenues. They can help companies potentially to reduce churn, and I suppose thinking back to scalability as well, they could be a nice way route into being able to bundle additional products and services with your core offering to customers. So certainly a very promising business model, and one which I guess could span across everything that we looked at today.
Yeah, okay, right, thanks. So it's more a feature perhaps of underlying business models than being a standalone business model in its own right.
Absolutely, yeah.
Okay. There's a question here about the division between partners and clients. So I think in relation to Spark Fund, Alex, do you have any comment on, who's, sometimes a company might be a client, sometimes they might be a partner. With Spark Fund, is that evident in the way that they approach the market?
I think it is, in the sense that the client is going to be contracted through this modular contract, and the partner is just going to be a provider of the technology or the services. Actually, in the end, we can consider SparkFun as being a platform as well, because what they do is just putting in contact these partners which provide the different technologies or services or installation and their end clients. So their key strength is really this ability to connect them and the different platforms they have and the framework they've developed for contracting their clients.
Okay, thank you for that. There's another question on virtual PPAs. Did we look at virtual PPAs in this work? Not just sort of physical PPAs, but and on-site ones. And I think the answer is we didn't look at those specifically, Neil, did we?
We didn't. The closest thing would obviously be the physical PPAs and in the C&I space, and I suppose to some extent, people are trying to apply virtual PPAs to the residential space, and that could maybe come under the sort of peer-to-peer trading platform type business model. We're seeing lots of virtual versions of those being developed, so not based in physical microgrids. So I think there's probably parallels between that business model and the kind of virtual PPA model as well.
Yeah. Okay. No, I think people are really interested in examples of some of the that illustrate some of the characteristics we talked about today in terms of improving scalability or playing into the areas that we see most attractive. I mean, for example, around scalability of C&I business models, I can see that the scalability of that is really challenging. Improving the scalability, reducing the cost of scaling a C&I business model is really challenging. I mean, do you see any companies out there that are making progress with those challenges, or perhaps are not your recommendations for winners necessarily, but companies that are demonstrating making progress in those areas?
Yeah, definitely. There's quite a lot. Again, I think both of these are US-based examples. So the likes of InnoWatts and Uplight, who are formerly First Fuel, and they're really looking to help to end service providers or companies with end customer plays to harness data, to use AI and to really make data work right across their supply chain. So these examples, InnoWatts and Uplight, are both software companies, and they enable utilities to deliver kind of bespoke energy saving solutions to C&I customers. So they help with design of installations on site, but they also provide kind of marketplaces as well, where customers can come and find like relevant energy efficiency products and so on. So yeah, there's definitely those, I would say, are two good examples of kind of software companies who are not working directly with end customers, but via utilities who are helping them to harness their data and deliver these solutions in a more scalable manner. So cutting out some of that, some of the manual work.
Okay, cool. Okay, I'm conscious of time, so that's about 45. We're coming up to about 45 minutes now. There's a few other questions that have come in. We'll certainly come back to those separately. If you'd like a copy of the slides, happy to share them with you. But please contact us if you'd like a PDF of the presentation today. We have recorded the webinar, so we will be sending out a link to the webinar recording, so you can share that with colleagues. You can see on the screen here that work that we're planning to do in future. One or two people have sent in questions regarding how to access the research and the costs, etc. to that. Obviously, we're delighted to talk to you further about that, and we'll respond to you individually on that. If anybody else would like to ask any questions about the research, feel free to contact myself, Neil, or Alex. But I'll end the webinar there. I thank everyone for their time. We know how busy everyone is, so hopefully you found this an interesting presentation, and it's stimulated your thinking, or perhaps validated your thinking, or challenged your thinking. But hopefully you found it useful and insightful. So thank you everyone for your time and participation. Look forward to talking to you in future, particularly with subscribers. Feel free to reach out to us, and we'll be happy to talk to you directly. And once again, people on the line who aren't subscribers, please, we'll be delighted to welcome you as a client to Delta E. So thank you, everyone. Have a good day.
Thank you, everybody.
Thank you.